All right, guys, term or permanent? We're going to take a slightly different approach because I think all of us here believe that there's a place for term and a place for whole life, and it's not mutually exclusive. It doesn't have to be one or the other. So, when do you guys think that term insurance might be an appropriate suggestion for somebody?
In our family, we have several terms and we also have the permanent life insurance. For me, the term will cover until my kids graduate from college. I need that protection just in case something could happen because me and my husband, we don't have large family here in the US, so we need that income protection or mortgage protection. And then the IUL we have is for the purpose of infinite banking concept. We pull the money out as a loan and utilize to get the spread for my real estate investing.
For me, I have a term policy that I put in place when I was having my first child, and this is prior to me discovering the infinite banking concept. And it's cheap enough, and it was a 30-year term when I got it in place, so that I have no reason to get rid of it. I also have some term insurance through my work. So I think those are some reasonable places for me and my situation as to why I still have term policies. But I think for the general population, I would say that if you have a life insurance need and you can't afford a permanent policy, there is going to be some added cost for a permanent policy. Even with the optimal designs that we do, there is some cost that is going to be slightly higher for the same amount of life insurance. So if you have a life insurance need that you absolutely need to meet, but you cannot afford the cost of the permanent policy, then I think term makes absolute sense for that situation.
Yeah, so term insurance is cheap insurance. The idea is just to get the lowest cost possible for a death benefit in the case somebody's going to die. And there's a lot of really cheap term policies out there that can help meet that need. Somebody doesn't necessarily need to put out thousands and thousands of dollars for a death benefit that might meet their needs for hundreds of dollars if it's a temporary need. Term insurance is temporary. That's kind of the key to these things. It's not meant to have forever. It will most likely not be around when you die. That's why they're so cheap. Most of them are already expired by the time somebody's going to be passing away. So a lot of people will just take the cheap insurance, or employers may provide that type of cheap insurance as an extra benefit for some employees. So that's a good use of term insurance. So if term insurance works good for people that just have a death benefit need, when might be a good time for permanent insurance?
Well, permanent life insurance is suitable for anyone who wants to build an asset using whole life or IUL or any kind of universal life insurance. We want that guarantee, or we also want that death benefit eventually could pay off. Like what James just mentioned, term insurance, the statistically only 2 to 3% term insurance actually will pay off.
And so with the decision to get a permanent life insurance policy, in my opinion, for where I think it fits for most people, is if you do want to use it in the way that we talk about with the infinite banking concept, or using it as your finance or line of credit tool. And I think that is really, there's very few to it. It is, in my mind, the best asset for the purpose of locking in compound interest gains and using it to build wealth elsewhere at the same time. And it can be, I think for most people as well, one of the entry level points for this, you don't even have to be doing anything crazy with the infinite banking concept. Just replacing what you have in your emergencies fund can be a good starting point, because these permanent policies can be really good vehicles for storing your emergency fund.
Now, both of you guys brought up the permanent policies as a type of asset and somewhere to store your money. But I want to also add that at the base level, a permanent policy is meant for somebody who absolutely wants to have a death benefit when they die. They don't want to run out of insurance at any point. This could be for estate planning purposes. It could be for passing on generational wealth. There's all kinds of reasons why somebody may want to ensure that they have this tax-free death benefit when they actually die, and not just coverage for a certain number of years. So at its base level, that encompasses a lot of people that ultimately it's not worth it to just have the cheap term insurance, because really they figure they're going to outlive that part. And they still see a need for having that death benefit. Now, I think most of the arguments for term revolve around buy term and invest the difference, because at some point down the road, you're going to make enough money, you no longer need that death benefit coverage. You're going to outgrow your need for that coverage. But I got to tell you, everybody that I work with, almost exclusively, will never outrun that coverage. They're either going to utilize that death benefit need at some point in their life, or passing on generational wealth, or meeting some estate tax needs.
Another concept is called kid millionaire. I know a lot of parents, they want to lock in their kids' insurability and then utilize whole life or IUL as a gift for their kids. Sometimes people just use the annual gift amount to fund their kids' policy. That could be another big usage for the purpose of purchasing a permanent life insurance.
Yeah, and I think that is a good example of in a scenario that people will want to use permanent life insurance. And you can also, in doing that, set up a place for your kids to end up storing wealth with those policies in the future, especially maybe when your death benefit pays out and you have space in there to do that for your children. There's a lot of great vehicles and avenues that you can use this for. I will say that one of the arguments against this that you'll hear is that it's sort of along the lines of what James was saying with you build up the assets. One reality is if you have market assets and there's the concept of step up basis and things like that. But he did call out, I think I want to highlight the estate tax considerations are a big one, and pretty much all of those other assets are going to live within that, but you can have a tool, and life insurances can be included in this, but various forms of trusts can move stuff out of your estate. So life insurance is not the only tool in this regard. Realistically, as people do achieve levels of wealth, it is very common for folks to start using trusts and getting things out of their personal estate during their lifetime as well. So it's not the only tool, I would say.
So yeah, a lot of people have a certain death benefit need. So I do want to highlight, if you're, let's say that you have an income of $100,000 a year and you're 30 years old. Realistically, you've got another 40 plus years of living and at least another 35, 40 years of working. That's potentially $3.5–4 million of income that you might want to insure. Well, if you want $3.5–4 million of death benefit, that's pretty expensive if you're buying it all as permanent insurance right out of the gate. You may or may not want to fork out the cash for that. There could be a situation where you might look at doing a mixture of both, which is kind of like where we specialize in the designs of having a small base amount of permanent insurance mixed in with some cheap term insurance that gives us all kinds of financial benefits and ability to store cash, grow in the future, have a permanent death benefit that's a lot higher than whatever that term insurance is. We can find this happy medium that really works well for a lot of people.
And I think that's the thing. There are a lot of content creators out there that will knock on term and say, only get an IUL or only get whole life. And there's a lot of content creators in the financial space that will say, only buy term and invest the difference. I think, generally speaking, I'm a big supporter of permanent life insurance. But I don't think that term has no place for many people. And, I think as I spent a decent amount of time in the military, for a long time, that was I had the SGLI life insurance, and that was the only life insurance that I had. So I think there's a lot of good places for term, but generally speaking, I'm of the opinion that if you can afford it, getting a place where you can park some money in some permanent life insurance is definitely my preferred avenue.
There's some comparison for term and permanent for rent versus own. at certain situation, probably renting is the best scenario. At certain period of your life, probably you want to own something. Eventually, that becomes your assets. I think this renting, because it's rent, you pay rent, you pay another rent next year. Exactly what this term life insurance will be. You use it. If you don't use it, you lose it. Next year, you have to pay the premium. As long as I think the audience understand what the right need at this moment and then plan well, you will find out what is the best way or what is the best choice at this particular moment for you.
I like that analogy. I think term insurance is an expense at the end of the day, and permanent insurance is an asset. You're going to grow that asset over time, and eventually it will pay out to your beneficiaries tax-free. And there could be a good place for either one of those in any particular situation. I think it's up to you, the person. I think it's up to the viewer and consultation with their financial advisors and insurance agent to decide what might be best for them. With that said, do you guys have a call to action for our listeners this week?
It's time for this week's call to action.
If you have a life insurance need and you are looking to get a term policy because you can't afford permanent life insurance, ensure that you're looking at carriers that have products that are convertible. If you have interest in getting a permanent policy, getting with a carrier that has a good convertible term or the policy can be converted into a good permanent policy. That is a good consideration to have and keep in mind. So if you speak with one of us, we can guide you in that direction depending on your situation and what you want. But if you have an agent that knows about this stuff, then they might also be able to guide you in that direction.
Well, I want to call out for analyzing your beneficiary forms for whatever life insurance policy you have. A lot of people will have the term or group life insurance through their employers. For any of the commercial policies you have, make sure the beneficiary forms are correct. I think that's super important. We need to make sure your beneficiaries will know about this situation as well.
And I think a good call to action for folks this week is to discuss with your financial advisor or your insurance agent. If you don't have one of those, reach out to one of us and let's talk permanent or term, what might help best meet your financial need at this point in time and hopefully for the foreseeable future. Appreciate you joining us. Next week, we're going to talk about what Dave Ramsey gets completely wrong. Should be a fun one. Be sure to join us. Signing off, I'm James Barber, your Oregon Cash Flow Pro. I'm licensed for life insurance and annuities across the country.
And my name's Jane. I'm the host of Tax Them Millionaire Club. You can scan the QR code to join. I'm also licensed in multiple states. Look forward to virtually meeting with you.
And I'm Carlo Vaccaro. You can find me at netwealthfinance.com or on YouTube at netwealthfinance. Work with life insurance clients across the country.
Take care. See you next week.
Thank you.
Thanks for tuning in.
The next 20 seconds determine your future. Subscribe, meet with us, or continue educating yourself with these videos right over here.